Welcome to Infinity Capital, everyone. This is Raj. Let's do a quick review on Supreme Industries. This stock is a part of my short-term portfolio. Market cap is 30,000 crores. So this company specializes in plastic piping systems. So they are competitors to Astral, Prince Pipe Fittings, Apollo Pipes. So these are the companies you may have heard of all of these companies. So they also do cross-laminated films, protective packaging products, industrial molded components. They make molded furniture as well. But major chunk of their revenue is coming out of the plastic piping system. So we can cross-reference that on Tijori. So plastic piping products, they make 75% of their operating profit. All right. So let's do some other information check. What is their expansion strategy? Manufacturing capacity, they have around 25 units spread across 12 states. It's extremely important to understand that if you are going to be in this business, wherein your SKUs are a lot, you have different types of pipes, different fittings, and you are going to supply it throughout the country. It's extremely important to be strategically located. That is the reason why they have so many units spread across the country. Makes logistics warehousing better. So they have around 3, 5, 6, 7 partners, and is also in the process of opening first plastic product complex in Telangana. So what else are they doing? Companies aiming to increase share of value-added products, whose operating profit margin is more than 17%. So currently VAP contributes 38% of the turnover, right? So they are aiming to increase exports significantly over the next 5 years. Exports are only 3% right now. So they are doing around 350 crores of capex, right? And they also hold a stake in Supreme Petrochemicals, right? So something noteworthy. Let's do some quick overview. So the stock is trading at a PE of 26, which is pretty good. According to me, there is more headroom for this stock to go up, and we'll discuss why. Okay, dividend yield is pretty good. Their ROCE, ROE numbers are very robust. All right, price to sales is pretty decent. If we do a peer comparison, Astral is trading at a PE of 87, quoting a price to sales of 11.6. Prince Pipes is trading at a PE of 32, price to sales of 3.4. Apollo Pipes is trading at a PE of 44, price to sales of 3.5. So in my opinion, this stock is currently undervalued, right? What else? So promoter is holding 48-49% stake. There is no pledge, right? Sales growth has been pretty decent in the past 3 years. Past 5 years, sales growth has been pretty robust. So what is interesting about this company is the fact that although we went through a pretty serious COVID rampage, the profitability of this company continues to grow. Even in March 2020, they didn't have much of a dip. Yes, their margins took a hit, but the margins were actually pretty bad earlier also. So if you see they were struggling with their margins for so many years, but suddenly their margins have gone up. So this needs more investigation also. So I'm trying to find out why this is happening. So this is one thing. So if we do a peer analysis, let's look at Astral. If we look at Astral, even their margins have become better. So let's look at Prince Pipes. Prince Pipes, their margins have also become better. So this could be, I still have to find out what is the reason behind it. But so this is a good thing for them. Also, sales are constantly coming at a higher clip. This is the reason why I'm looking at this stock. Sales are constantly rising. So it seems that COVID has not affected this company much. If you look at their overall sales, their sales have almost doubled since 2016. and their profit has gone up by 600 basis points. They were doing 200 crores of profits in 2016, and currently they are at 1200 crores. So numbers are staggering, they are pretty good, and this is the reason why I like this company. All right, so let's quickly go on investors. So promoter is holding 49% stake. FIIs have upped their stake by around 2%. DIIs have upped their stake a little bit, right? So overall there is good interest by institutions as well in this company. Couple of other things, if you see, their inventory days has gone down, as compared to 2017, 18, 19. Inventory days has gone down. Then their cash conversion cycle has also gone down. Their working capital days has gone down significantly. So this also needs some sort of investigation. This thing happened again in 2015, but then it rose up. So we'll probably have to find out. ROC has become better, right? So there's another good thing is their cash flows have doubled as compared to last year. And this company has been constantly generating positive cash flow from operations, since, so if you see, every sort of 4 or 5 years, the cash flow doubles. Cash flow from operation doubles. So it doubled over here. Then from here, it doubled here. So it's every 4 to 5 years, the cash flow is almost doubling. So that's a great thing. When we come to Tijori and look at their cash flow CAGR, so their cash flow CAGR has been staggering, has been amazing. Over any period of time, 5 years, 10 years, it has been very good. Okay. What else is good about this company right now? There is no dilution in equity. They've paid off their borrowings. That is the reason, if you see, their interest component has gone down drastically. So this is adding around 25 crores of 20 to 25 crores to their bottom line. Okay. They are doing 350 crores of capex. So this is the reason why we can see that the fixed assets, there is some sort of increase over here. Around 111 crores is in capital works in progress. They have 385 crores of investments and 339 crores of cash on the books. So that gives them roughly around 700 crores they have, that they can deploy. So if they want to incur more capex in the future, they have enough capital with them. They will not have to take much debt, right? Let's look at the quarterly earnings. Sequentially, the numbers are very good. September, if we'll go a year back, year on year also, the numbers are fantastic, and this is the reason why I am interested in this stock, and I've been accumulating this stock. On a year-on-year basis, there wasn't much of a dip in 2020. March 2021, the sales have already crossed pre-COVID levels. Trailing 12 months, we are seeing better numbers, stronger numbers. The margins have become better, and this needs to be investigated. They have some other income, of 150 crores and 224 crores. So this needs to be investigated. What is the So I'll try and find out this, in a few days. Their profits have almost doubled since 2020. It's gone up by more than 60%, 60-70%. So that is also a good sign, right? Let's look at the PE level of this company. So currently stock is trading at a PE of 24-25. The median PE is around 34, right? And we saw that all the competitors are trading above 30 to 35. So assuming that this stock reaches its median PE or a PE of 35, into the current EPS is 91.44, so into 92. So we can expect 3,200, 3,000 to 3,200, in this stock if this stock starts re-rating. So this is my initial target in this stock. Let's do a quick analysis on the technical front. So technically, if we see the 50-day moving average is sideways because the stock has been sort of trending sideways. 200-day moving average is up. The stock is constantly taking support at 200-day moving average. So this is a good sign. The trend is up, right? So what's happening? Basically, the stock is sort of, so if we go back a little bit, the stock was pretty much trading in this range, and then it broke out, and now it's sort of consolidating after this, after this 100% move. The stock is consolidating. So the stock is trading within this range. This is the range that the stock is trading within 1800 and within 2600. So what sort of strategy do we have? So I had initially bought here around 2200, post which the stock did a good rally, but then due to weak market conditions, the stock sort of corrected again, but that's all right. So I've been adding around this level, and basically I'll be looking to add, between this level, between 2100 and 2450. My target on the upside would be around 3000 to 3200. So December is a seasonally weak month, and generally, I refrain from taking big positions in December. So I'm expecting that this correction might continue, or the market will consolidate. If another sort of a capitulation happens in the market, that would be amazing in my opinion, because that would sort of remove more people from the market, because retail essentially has they don't like to see much downside. So if the market corrects another 5-10%, a lot of people will be shaken out of the market. So that will be great, because once that happens, the market will have more leg to rally on the upside. However, I would not like to speculate much, but I would like to continue to accumulate this stock between these levels. So this was the analysis on Supreme Industries. This is not a buy sell recommendation, guys. This is an educational video. Thanks a lot for watching.